Threadneedle Ventures founder and managing partner. It's good to see you. Welcome to Halftime.
Thanks, Scott. Good to see you guys.
Yeah, we debated for a while here of where this rally is that's supposed to happen between now and the end of the year. Is it going to show up or not?
I don't think it's not only going to not show up, Scott. I think where we are now is only going to go one way, and I think that's south. I'm finding the expensiveness of the S&P right now slightly perplexing when you look at a world that I think is about to see increased recessionary outlook, certainly for the US's overseas markets, because we've got an energy crisis that I just don't think we're talking about enough quite yet here through the lens of the domestic US market.
But you don't even think between now and the end of the year, if we call it 5-6 weeks, we don't have room for a run that people are looking for before we have to face some of the more serious issues that you and others suggest are looming?
I'm just not as optimistic, Scott. I think there are a couple of things that are going to happen between now and the end of the year. I think the level of euphoria that we've seen powering up, for example, the Netflix stocks, the Ford stocks, the GM stocks, these are ones I've done, personally quite well in. I'm going to look to start closing those out because I do think that we're going to start having a return to weak consumer sentiment here in the US, even weaker consumer sentiment overseas. And I think we're going to see the repercussions of that start to kick in before this year is out. Your
personal holdings are sort of littered with a lot of these stocks that are in the crosshairs right now as it relates to mega cap tech. Apple, Amazon, mentioned Netflix, Meta, Google. Some say the tide has turned for a while for those. You agree?
I think that we're going to continue to see them be very volatile and continue to struggle with the reductions, for example, in the advertising budgets, which I'm seeing and have seen for a little bit for a while now, coming on the side of their clients. There's been this drumbeat to have marketing spend cut quite aggressively starting from the beginning of the summer. So I've been actually slamming the brakes, Scott, on positions in those. I haven't been averaging down my entry points into those. I've been pivoting to look at more US-centric, much less cyclical, much less interest rate sensitive businesses instead.